Welcome back to Investing Talk Podcast. Today, we're taking a closer look at Clear Secure. The company many of us recognize for making airport security maybe a little less painful. But beneath that smooth experience, there's a really interesting financial story going on. We're seeing rapid expansion, strong financials, but also, well, some recent bumps in the road. Our mission today is to sort of peel back the layers on their recent financial reports, their market moves, the competitive scene, basically give you a clear picture of where Clear Secure stands right now and maybe what's next for them. And hey, if you find this useful, please take a second to subscribe, like, maybe leave a comment. And if you feel like helping us keep these analyses coming, you could even consider buying us a coffee. Your support really does help. Okay, let's unpack this. So Clear Secure, like I said, most of us immediately picture those dedicated airport lanes, faster security. But that's just part of the picture, isn't it? What's really at the core of their business? How are they creating this frictionless experience beyond just the airport line?
Well, it's interesting because they've really built out this secure identity platform. It goes way beyond just getting you through the TSA checkpoint faster. At its heart, the business uses biometric verification, your face, your fingerprints, to manage identity for both digital and physical experiences. Now, Clear Plus, that's their main product, the one for expedited airport screening. But they've been very strategic about expanding beyond that. They're also involved in helping people enroll in TSA PreCheck, which is smart. It gives travelers more options within those trusted traveler programs. But maybe the more forward-looking part is something called Clear Verified.
Okay.
This is their B2B solution. It basically lets other companies, partners, plug into Clear's digital identity tech. Think secure access for different venues, events, not just airports.
Okay. So a stadium or a concert could use Clear's system to check people in quickly without building their own thing.
That's the idea. Let's partners tap into Clear's existing, trusted biometric framework.
So it really is becoming more of a broad digital identity ecosystem, not just a travel perk. That's pretty clever leverage of their core tech. What else stands out about how they're reaching people and, well, making money from this convenience?
Well, besides the B2B side, their Clear mobile app has some neat features too, aimed at smoothing out the whole travel journey. There's Home to Gate, for example. It's like this personalized guide, looking at traffic, security wait times, tells you the best time to leave for your flight.
Interesting.
And then there's Reserve, powered by Clear. That's like a virtual queue. You can pre-book a security time slot. You don't even need the full Clear Plus membership for that one. It's a way they can offer convenience to more people, potentially capture a wider market.
So different tiers of service, essentially.
Kind of. It shows they're thinking about expanding their addressable market. And of course, they also have revenue streams from partnerships with airports, like revenue sharing, plus advertising and related services. So it's becoming more diversified.
That makes a lot of sense. Building a versatile platform, multiple income streams seems smart. But, even great ideas need solid financials backing them up. So let's shift gears and get into the numbers. How has Clear Secure actually been performing, financially speaking, in recent quarters, where it truly counts?
They've certainly shown some impressive financial momentum recently. For Q1 2025, they reported revenue of $211.4 million. That's up 18.1% compared to the same quarter last year.
Okay, nearly 20% growth year over year. That's strong.
It is. And total bookings also saw a healthy jump in Q1, up 14.8% from the prior year, hitting $207.2 million. And this isn't just a one-off. They've consistently posted double-digit annual revenue growth for the past 3 years. It really points to strong and sustained demand for what they offer.
Okay, that growth engine sounds powerful, but growth is one piece, profitability is another. Are they managing to turn that extra revenue into actual earnings? Is it hitting the bottom line?
Good question. And yes, they are showing improvement there too. For Q1 2025, their net income per common share came in at 26 cents. And importantly, their operating income margin expanded quite a bit by 450 basis points year over year in that quarter.
450 basis points, so 4.5 percentage points better margin.
Correct. It fundamentally means they're becoming more efficient, turning more of that growing revenue into actual profit. That's a very healthy sign for a maturing operation. Profitable growth.
That's a key distinction, definitely. And what about free cash flow? The actual cash the business generates, not just accounting profit. How's that looking? Are they generating real cash?
Oh, absolutely. Clear Secure has shown really strong free cash flow generation. For the full fiscal year 2023, it was around $250 million. That grew to about $270 million in fiscal 2024. And then just in Q1 of fiscal 2025, they generated $91.3 million in free cash flow.
Wow, just in one quarter.
Right. And management's actually guiding for the full fiscal year 2025 to be at least $310 million in free cash flow. That's a lot of cash coming into the business. Plus, they have solid cash reserves, about $533 million on hand as of the end of March 2025. Gives them a lot of flexibility.
That is impressive cash generation. And for a company still growing, that cash is a powerful asset. So how are they using that capital? Is it all going back into growth, or are they returning some to shareholders? What's the strategy there?
They seem to be doing a bit of both, actually. In Q1, they returned $66.6 million through dividends and distributions, and they also spent $101.7 million on share repurchases.
Okay, buybacks too.
Right. Buybacks can signal management thinks the stock is maybe undervalued, and it boosts EPS for the remaining shareholders. And speaking of dividends, a key recent event was declaring a regular quarterly cash dividend of 0.125 cents per share back in early May. Payment was around mid-June. So it shows a continued commitment to returning capital, though as we'll see, the level has shifted a bit.
Ah, okay. And this is where the story around Clear Secure gets, well, a bit more complex. Because despite these strong numbers, we've just walked through good revenue growth, improving margins, strong cash flow. The market's reaction lately has been, let's say, interesting. What's driving that disconnect?
That's a really important point, looking at the broader sentiment. That quarterly dividend they just declared, the 0.125 cents per share. While it is a return of capital, it's actually lower than their average dividend per share over the last 10 quarters. That average was closer to 0.191 cents.
So a noticeable cut, then?
It is. It signals a reduction compared to what investors might have gotten used to.
Yeah.
And for many investors, any dividend cut can be a bit of a warning sign. It could suggest they're holding on to capital for growth, maybe, or perhaps anticipating some near-term challenges. It raises questions.
Okay, so the lower dividend is one factor, and you mentioned there was also an updated earnings outlook. That might be playing into the shift in mood, too.
That's correct. The company recently updated its earnings expectations for the current quarter. They're now guiding to $1.23 per share. Now, that represents a year-over-year decline of around 32.4%.
Oof, that's quite a downward revision.
It is. And revisions like that definitely grab the attention of analysts and investors. It signals a potential slowdown, maybe higher cost than expected. When a company that's been growing strongly suddenly lowers guidance like that, it naturally makes people wonder about the sustainability of that growth or if there are unexpected issues.
Makes sense. So how did the stock price react specifically to these developments? Was it a sharp drop or more up and down?
It's definitely seen some volatility, particularly in early June. For instance, on June 3rd, the shares actually rose about 3.6%, hit an intraday high near $26.14, closed around $25.98. But as of market close on June 17th, the price was down to $24.54. So, below those recent highs, though still above its lows for the year.
So some movement.
What's really telling is that trading volume picked up significantly around key dates, like the ex-dividend date and right after that earnings guidance update. It shows investors were actively rethinking the risk-reward balance based on this new information. It wasn't just drifting. People were making decisions.
Okay, so given these financial updates, the dividend change, the stock's reaction, what's the general feeling from analysts now? And what are people saying on, say, social media?
Well, analyst sentiment, as you might expect, seems more cautious now. They're likely adjusting their models because of the lower earnings expectations and the dividend cut. On social platforms, you see a lot of discussion focusing on disappointment over that reduced dividend, naturally, and concerns about the earnings trend. Interestingly, there's also been some unverified chatter about potential acquisition interest, with the stock price dipping. Pure speculation at this point, though.
Yeah, always take that with a grain of salt.
Indeed. Overall, the sentiment feels kind of mixed to cautious right now. Traders are clearly trying to balance these near-term headwinds, the guidance, the dividend, against those longer-term positive trends for the industry, like the push for digital ID.
Yeah.
It's a real balancing act.
Okay, let's try and pull all this together then. We've got the strong underlying growth, but then these recent changes in dividends and guidance, the stock volatility, the mixed sentiment. What does this all really mean for ClearSecure's competitive position? And what does their future look like in this changing environment?
Connecting it back to the bigger picture, ClearSecure definitely still holds some key competitive advantages. Their platform is widely used, well-established, they have very strong brand recognition, people know the name, and crucially, they benefit from network effects through all those partnerships, airlines, airports, sports teams.
Right. The more places accept it, the more valuable it becomes.
Precisely. They are the clear leader, pardon the pun, in biometric airport security here in the U.S. And their move into other areas like stadiums and events helps solidify that leadership position.
So a solid foundation. What are the main things that could drive their growth from here, especially considering these recent market wobbles?
Well, the fundamental trends are still working in their favor. There's just this increasing demand from everyone for smoother, faster travel and security. That got a real boost post-pandemic. People are much more open to using technology for convenience now. Plus, you have growing regulatory support, generally speaking, for digital ID solutions. Governments and industries are looking for better ways to verify identity securely and efficiently. That's a big tailwind. And their continued push into new venues, beyond just airports, that Clear Verified product we talked about, that's a huge potential growth area, opening up much bigger markets.
Okay, positive drivers, but every company faces risks. What are the main ones investors should really keep an eye on with Clear Secure?
The big ones really circle around regulation, privacy, and data protection. Given they handle sensitive biometric data, any tightening of privacy rules or new regulations could seriously impact their business model, maybe increase costs.
That makes sense. Trust is everything.
It really is. And any kind of data breach, even a small one, would be incredibly damaging to their reputation and that trust. Also, their reliance on key partners, the airports, the airlines, that creates contract renewal risk. If a major partner decided not to renew, that would hurt. And finally, because they're so tied to travel, they are exposed to cyclical risk. If air travel demand drops suddenly, whether due to the economy or some global event, that would impact them directly.
Okay, those are important considerations. How do they actually stack up against competitors or similar companies financially and position-wise? Are they really outperforming?
Well, looking at revenue growth, ClearSecure's 18% year-over-year does stand out compared to some related tech players. You mentioned Okta earlier. They were around 15% growth. IDEMIA, another identity company, was about 11%, so Clear's growth is strong there.
And profitability.
On profitability, while Okta, for example, posted negative EPS for their last fiscal year, ClearSecure managed that positive $0.26 per share in Q1. That's an important positive sign. It indicates they are actually making money on a per-share basis, even with the recent adjustments. And their free cash flow margin tends to be quite high compared to peers, which points to that operational efficiency we discussed. Within their specific niche expedited biometric airport access in the U.S., they're absolutely the leader. They even outperform some general software firms like Infusion or Braze on recent revenue and profit metrics. They really own that particular space.
Sounds like a strong profile in their core market, despite the recent noise. So looking ahead, what are the potential catalysts that could really boost ClearSecure? And conversely, what are the main risks that could hold them back?
On the catalyst side, a big one could be the continued rollout and success of that TSA PreCheck enrollment partnership. That could really drive new member growth and revenue, embedding them deeper into the official travel security system. Also, their strong cash position, that $500+ million, gives them options for potential M&A, buying other companies to expand their market reach or add new tech capabilities.
And the risks.
The risks remain largely what we discussed. Regulatory scrutiny on biometric data privacy is probably the biggest overhang. If rules get significantly tighter, that could really impact how they operate. And again, any significant downturn in air travel demand would hit their core business, affecting renewals and growth.
Okay, so let's wrap this up. Considering everything, the growth, the cash flow, the dividend change, the guidance, the risks, the market position, what's the final takeaway for listeners thinking about ClearSecure?
I think the takeaway is that ClearSecure is still very much a leader in biometric security solutions. They've shown strong revenue growth, improving profitability, very healthy cash generation, and they are returning capital to shareholders, even if the dividend level changed recently. Their competitive advantages, like brand strength and those network effects in airports and stadiums, are still very much intact.
Right. And the key risks seem to be mostly regulatory and privacy related, which are significant, but they're also balanced by those big trends pushing towards digital ID adoption everywhere. The recent dividend cut and the lowered earnings guidance are clearly what's been driving the stock's recent moves, suggesting maybe some near-term headwinds to watch closely.
That seems fair. Looking at the fundamentals, the financial health, the market leadership in their niche, the ongoing innovation, the general analyst view, despite the recent news, seems to hover around neutral to positive. Often a hold rating, but with maybe an upward lean towards buy if those potential catalysts pan out, or if the regulatory concerns stay manageable.
So a final thought for everyone listening: as digital identity becomes more and more central to how we live and travel, how will the evolving regulatory landscape shape innovation in this space? And what does that mean for companies like ClearSecure trying to lead the way? Definitely something to think about on your next trip. That wraps up our deep dive into Clear Secure. We hope this gave you a clearer perspective on their journey and what might be ahead. Thanks so much for listening.